What is up, everybody? Welcome back to Bitcoin and Markets. My name is Ansel Lindner. Today is Monday, so hope you guys had a great weekend. This is my free newsletter day. The Bitcoin Fundamentals Report goes out every Monday, so we are just going to be going through that and seeing what is going on out there in Bitcoin land on probably the most positive week for Bitcoin in Bitcoin's history. I mean, can you think of a different time that a presidential hopeful is endorsing Bitcoin and also not promoting and putting down CBDCs? So pretty big stuff going on out there. We're going to go through all of it. What you're seeing here is Bitcoin and markets.com, where all my stuff comes out. Bitcoin fundamentals report number 290. Let me make sure all my levels are correct. And over on Telegram. Okay, good. So guys, I am live streaming on YouTube, Rumble, Telegram, and Twitter today. So you guys can go find any of those locations, like, comment, subscribe. I'll look at the comments later on and appreciate the subscribe and turn your notifications on, because I do live stream 2 to 3 times a week, sometimes at random times. But if you have that bell clicked on YouTube, then you can get a notification of the live stream going. So, okay, Bitcoin fundamentals report number 290, kind of a patriotic theme here for the cover image. I used to start with a meme, but now I'm doing more of these cover images. But happy Memorial Day out there for everybody. Snapshot of Bitcoin. Well, first, let me go over this. So quick navigation. These are all the different sections that I'm going to be going over today. Headlines, macro, price analysis, mining, and layer 2. It's a big snapshot of the entire Bitcoin industry, including the macro that kind of touches on the periphery of Bitcoin, right? So, okay, snapshot. Weekly trend, we're nearing all-time highs. We'll take a look at the live price chart and what I think about price down below. Media sentiment is extremely positive. Of course, we had all this news this week. Network traffic is low. Even though this is extremely positive, network traffic is very low. Mining industry is recovering quite quickly after the halving. We'll take a look at hash rate, difficulty, and that kind of stuff down below. Price section, weekly price, 70,164 at the time of writing. That's up 2% from the last issue. Market cap is 1.381 trillion. Satoshis per dollar, 1426. One finny, that's my denomination of Bitcoin, 1/10,000th of a Bitcoin, right in the middle of the decimal places, is $7.01. Mining sector. Previous difficulty adjustment was plus 1.5%, and that followed the post-halving decline in difficulty. So we could see that last difficulty adjustment last week, it was already starting to turn around and bottom out after the halving. And the next estimated adjustment is plus 6% in about another week. So miners are coming back on, hash rates coming back on. Mempool, below 200 megabytes at 187. Fees to get in the next block, $1.47 or 15 sats per virtual byte. So you can see very, very low for fees and activity on the network. Low priority fee is above $1. I think it was below $1 last week, but $1.08. Lightning Network capacity ticked a little bit higher by 83 Bitcoins this week, 1.7%. And channels also went higher, up 133 channels net, on net. And that's 0.3% increase. Okay, next section, in case you missed it, I have all my Bitcoin Magazine Pro stuff. Let me go to that and refresh this page. So if you guys don't know, I write for Bitcoin Magazine Pro, and that is bmpro.substack.com. And I put out 3 pieces for them each week. 2 of them are number driven by spreadsheets that I maintain, and then I write about them. And another one is just like an op-ed about Bitcoin, about macro or whatever. Like you see this last one, recession risks rise. How will Bitcoin handle it? And I go in talking about Target and Walmart, sticky prices finally coming down, retail sales and gasoline demand. We just go through all of these things, talking about possible recession, when might it start, and what are some of the signals we're looking at right now. So check out bmpro.substack.com. Okay, back to the newsletter and all my other stuff like my community streams, my blog, that. Okay, headlines. Trump goes hard, publicly endorses Bitcoin and promises to free Ross. I have to say it up front, politicians do lie. So this is not any sort of guarantee. He could simply be pandering to a large electorate at this point. They're estimating it to be 50 million that own Bitcoin or scam coins. So that is a pretty big electorate. I don't know what I would say for Bitcoin, maybe 25 million in the United States. So that is a big chunk. He does like gold. He's famous for liking gold. So it does fit kind of in the same wheelhouse here with sound money and his, his obsession with gold. He won't support a completely hands-off approach, in my opinion. He knows the dangers of blatant Ponzi schemes, fraud, and leverage. I mean, as a businessman, and as a kind of a savvy New Yorker, he is aware of these types of schemes and fraud and that can go on. And so I don't think that he will support a completely hands-off approach. He knows there's a lot of scams out there. Bitcoin doesn't need Trump. Trump needs Bitcoin. Remember that. He's pandering to us. Bitcoin doesn't need Trump. Trump needs Bitcoin. A lot of people were saying out there on Twitter that Bitcoiners are doing a 180 on government stuff. Like we all used to be cypherpunks and crypto anarchists, and now all of a sudden we're loving Trump and we are, liking regulation, and we want the SEC to come down on Tether or come down on Ethereum and all this. That's not the case. Okay. Trump needs Bitcoin, and everybody is affected by Bitcoin's incentives the same way. Eventually you bend the knee to Bitcoin. And that's what we're seeing here. They are pandering to us. Okay. Bitcoin will always be free of regulation within the protocol itself, right? It will always confirm your transactions. This action only makes their job easier. They will not have to spend massive amounts of money trying to enforce an unenforceable ban or launching and maintaining a CBDC. This will be a win for them no matter what. All they have to do is give up and pander to us. So whoever's writing his talking points is doing a very good job. These are almost perfection here. The future of Bitcoin will be made in the USA. I will support your right to self-custody. Bingo. I will keep Elizabeth Warren and her goons away from your Bitcoin. Bingo. And I will never allow the creation of a CBDC. Bingo. Being a longtime Bitcoiner, this is hard to believe. It's really hard to believe that we have Trump saying these things, saying these lines. It's so much winning, it's going to take a long time to sink in. Instead of fighting us, they're actively courting us and pandering to us. This reads like a wish list for Bitcoiners. The only thing I can think of that's not included is treating it like a currency for tax purposes. No capital gains taxes. Trump also promised to commute Ross Ulbricht's sentence. More amazing news. And Ross responded on Twitter. He said that he is having a hard time putting it into words. I don't know if I wouldn't want him to get his hopes up and then Trump not come through on these promises. But it is incredible news that Ross gets to come out. And people were going back and forth on Twitter, or I saw a poll that was which Bitcoin company is going to hire Ross immediately? Kraken, Riot, what were some other ones? I can't remember, but I think Kraken will offer him a job even before he gets out. That would be hilarious. Okay, Ethereum ETFs are unfortunately approved. It feels like a lifetime ago that this happened already, but it was last week. So the SEC officially approves all spot Bitcoin ETFs, and this was my response. The SEC just destroyed their whole reason to exist. A lot of people didn't understand that tweet, but the reason this destroys the SEC's reason to exist is because they are supposed to be the bulwark against scams, and fraud. Ethereum is obviously fraudulent. What logical reason is there now to stop Solana, Ripple, or Dogecoin from launching an ETF? Nothing. The only thing there will likely not be the only thing is there will likely not be enough demand for the big issuers like BlackRock and Fidelity to launch those ETFs. But someone else will. Some small guy is going to launch a Solana ETF, guaranteed. And how will they? And the SEC has effectively signed off on all these pump and dump schemes. My main issue with this is the legitimization of crypto and all the scams. Remember, Bitcoin is not crypto. Crypto is a hotbed of fraud and deception pretending to be like Bitcoin. I do not want to see people get scammed and wrecked. I even feel bad for the Ether folks. They were all mad in my comments, saying things like cry harder, even though they stole that from Bitcoin, and cope. The joke is on them. They do not understand that this is likely to crash the price of Ethereum. It's worse than I originally thought. Imagine holding ETH, that's the ticker for Grayscale's Ethereum Trust. It's getting converted into an ETF with a 10% annual penalty. Last week I was saying 5%. I think was it? Yeah, it's 5% annual penalty, but it's could be as high as 10% just to hold your ETH in the Grayscale Ethereum Trust as an ETF. The ETFs will not stake, and the average yield from staking so far is high single digits, 6 to 9%. Now add in a management fee of 1.5 to 2.5%. And this is going by what the Grayscale Bitcoin ETF is, 1.5, but the current fee for Ethereum is 2.5 for the Ethereum Trust. I haven't seen what it's going to, if they lowered it or not. Outflows are going to be huge. The Bitcoin launch saw a similar event. GBTC has seen a massive outflow of $17 billion so far. However, the inflows have outweighed this outflow by $13 billion. Bitcoin doesn't have the staking problem, which will hamper any whale demand for the ETH ETFs. So their inflows, Bitcoin faced this GBTC outflow, but Bitcoin had inflows to counteract that. But with this staking problem, they aren't going to have the inflows that Bitcoin had to outweigh the outflows from the ETH ETF, from the ETH E. Ethereum is supposed to be like oil, used as gas in smart contracts. ETH and in the ETF can't be used to stake or as gas and have to pay a fee on top of it. I think this is going to be very bad for the price of Ethereum. So they're all laughing, saying cope harder, cry harder, whatever. And they just don't know. They don't realize that this is going to be horrible for the price of Ethereum. So not only did the SEC fail to do any investor protection, fail to stop fraud and scams, they legitimized it, but it's also going to wreck people on top of that. So anyway, realignment continues with the White House passing FIT 21. Last Wednesday, the House passed the Financial Innovation and Technology for the 21st Century Act, or FIT 21, with a vote of 279 to 136. The bipartisan support. I think they had 79 Democrats vote for it, which is pretty big. This bill, viewed as a significant milestone for the industry by many, it aims to establish a regulatory framework for Bitcoin, defining what activities should be regulated by what agency. Although the bill is largely seen as expanding the CFTC's oversight of the spot market, the Securities and Exchange Commission would still retain a significant regulatory role. Crypto lawyers don't like it. Gabriel Shapiro criticized criticizes the bill for not reducing the SEC's power and for creating a dual regulatory regime shared between the SEC and the CFTC. He highlights that it gives the CFTC unprecedented regulatory authority over the spot commodities market, which could lead to overreach. This is the only commodity now that would have this regulatory oversight from the CFTC. That's what Shapiro is saying. Shapiro views the bill as a government sanction of activities already happening without permission, fearing the potential interference in free markets. So we don't really need the bill. That's what he's saying. And I do link to these things in the bullet points when I do have a link. So you guys can go check that out. Stephen Pauly also disapproves of the bill, arguing it unnecessarily expands the CFTC's jurisdiction and creates a protected environment for incumbents. He blames the industry for demanding new laws that could lead to adverse outcomes. Now, who was demanding new laws? It was the gaslighters in chief, Brian Armstrong. It was those types pushing for new treatment, new definitions to be created. So they're the ones pushing for this. So any negative consequence that comes from this is going to be, I think, squarely on their shoulders. But I don't think it's going to be that bad. I say I don't think this bill is necessary, but it is still a positive step. Not in the regulation of it. Like, I don't want more regulation. But what it stands for, this bill exposes the alignment of lawmakers in a positive direction for Bitcoin. So they are, kind of have a blindfold on, and they're trying to feel their way towards what they need to do to help Bitcoin. Okay. This is one of their first attempts. It's the first attempt to pass one of the houses, either the House or the Senate. And so it stands for that. It stands for trying to help Bitcoin, but they are probably going to mess it up. It puts to bed the often used normie critique that they will just ban Bitcoin whenever they want. You guys have probably heard that. Oh, this is created by the CIA. They'll just ban it whenever they want to stop it, So this puts this to bed because there's bipartisan support. It's going further and further towards total approval, total acceptance of Bitcoin. A new bill can fix things later after most people in the US own Bitcoin and people understand it more. Okay, so these are politicians. They're trying to understand it. There is Bitcoin education going on Capitol Hill. I never liked the Bitcoin education going on top of Capitol Hill because I thought that they were going to teach them how to regulate against it. They're going to teach them just enough of how to regulate against it. But that's one reason why it's going to take a long time for this stuff to sink in for me, all the winning to sink in, because it's just the opposite. Okay, Bitcoin is winning. And this bill just shows that they want to help. They're trying to figure it out. And we are much, much closer to full acceptance than to any sort of ban. That's what this shows. And it should give boomer investors the confidence to invest more into Bitcoin, through the ETFs. Okay, let's move on to macro. So the main thing in macro here is something big is happening in China. Hundreds of Chinese are making the very dangerous journey to flee China and sneak into the US. So there's a tweet thread here that I linked to. There's also this video you guys can watch. It's all about these Chinese people risking everything, sneaking over to Ecuador and then following that trail of immigrants up across the southern border in the United States. They're risking everything, spending a lot of money, and just to get into the United States. Now, why would they be doing this if China was so great? Some people might jump to, oh, they are doing it because they're spies. But this guy goes and interviews them, and they just look like, struggling people. They aren't spies. They're not anything special. They thought there was a better life in the United States. So something is happening to cause these people to flee. And it's a very shaky economy over there in China. People can feel it. People can feel it starting to fall apart. April also saw a huge flush of withdrawals from Chinese banks, the most ever. Let me bring this up. You can see right down here, 4 trillion yuan withdrawn from Chinese banks in April. Something is going on. Something is about to happen. China is stockpiling resources. This could be explained by a slow economy, not using them as fast. That's what I thought initially about this copper down here, that they just weren't using it because their economy was so slow that the stockpiles were growing. But now I tend to think there is a specific plan to stockpile commodities in anticipation of war or some other thing, which I'll go into here in a second. There have been reports of China stockpiling corn, wheat, soy, oil, copper, and even steel. So all of these things that the major importers of, they're stockpiling them. Gold trading activity has exploded higher, with some analysts thinking a devaluation is imminent. So why would they be going and buying a bunch of gold on the market, right? It's not like the central banks necessarily here are buying gold. This is gold trading activity because they're worried that something is going to happen to the currency. So they buy gold. Maybe the gold trading volume has something to do with concern about the consequences of the latest stimulus. Just last week, China is trying to end its epic property crisis. The hard work is just beginning. Quoting from this article, I think this is a CNN article, but Beijing has launched its most ambitious plan yet to rescue its property market, a development that investors have eagerly anticipated for months, but it's far from certain that the measures will work. The package is centered around Beijing's adoption of a policy that has already been tested in a major city, asking local governments to buy unsold homes from developers and convert them into social affordable housing. It also features a reduction in mortgage interest rates and down payment ratios, and more importantly, 300 billion yuan or $41 billion in cheap central bank cash to fund state purchases of unsold properties. So this is straight up money printing, not like what happens here. This would be an injection of $41 billion worth of yuan straight into the economy for these unsold properties. This sounds like money printing like mad over there, which is certainly putting pressure on their exchange rate. So going back, that would explain why the gold volumes are going up. Okay, lastly, the recent Chinese military drills that completely surrounded Taiwan. This isn't the first time they have done this, but the timing is significant. It is well known that they want Taiwan to come back into the fold. And with its failing economy, an attack on Taiwan would distract the people from rising up. My opinion is that they have a fear the people rising up. So they know the economy is garbage. They know that that they have to deliver on their promises. The Chinese Communist Party has to deliver on their promises. They have to bring a better life to the people. And if they don't, there's going to be massive protests rising up, possibly even a civil war. And that is probably going to happen sometime in the future, in the not too distant future, I would say, a decade or two, that there's going to be some sort of overthrow of the CCP. So they fear the people rising up. And so to stop the people from rising up, they might be forced to do something with Taiwan. And that would be a very, very bad showing for China, I'm sure. Amphibious landings are the hardest thing in war, and they have never done it. So a war would be disastrous for the CCP as well. But they might do it because they want to distract people. So anyway, that's what I'm thinking is behind all of this weird stuff going on in China. Oh, and I threw this in here late, right before I published it. The following chart summarizes what I've been saying for years now. China's economic model is over. They are going to resemble Japan's lost decades or crack down and become like North Korea. And you can see here the Japanese growth just flat for the last 4 years, where the US GDP continues to accelerate higher. And GDP is not a perfect measure, and China does measure it differently than the United States. Okay, that is it for all the headlines. Let's go into the Bitcoin price. And before I do that, let me check and see if there's any comments here. Dex Invictus with us. What's up? Okay, let me check Telegram. No comments over there. All right. Well, if you guys have questions, comments, or concerns, put them down in the chat below. Dan is typing something. Let's see what's up. China life has improved. Where are we at? Okay, Dan, I saw you were typing. I don't know if this is for the live stream or this is on the discussion you guys are having in there. China life has improved. It has. It has improved a lot. But from generation to generation, it has not. The youth unemployment rate is so bad that they stopped publishing the youth unemployment rate. You said the train system, smog is in air is gone. Yeah, I don't know about the smog thing. I think they still have quite a few problems in the north, like Beijing and places for smog. The train system, yeah, the train system's fine, but it's like losing money every single year. So people don't understand that when you build all this fancy stuff, you have to pay for it. You have to maintain it long term. It's not like it's just you spend it, you invest once, and you get this fast train system forever and ever and ever, and has all this chaos. No, it has negative utility for them right now because it costs them more to operate it than they get in economic activity from it. So it is a net loss. The train system argument is a net negative for China, not a positive. So are all those bridges you see that are so immaculate and so high and impressive through the gorges and stuff. That is extremely expensive to maintain. And it's a net negative. The manual labor or people not in large cities, it is better for them to come to the US. Yeah. I mean, they could move to Vietnam. They could move to the Philippines or something like that. For the middle class and the lower middle class, life is good. Yeah, but I mean, what's going on with the property bubble. If it was so good, why would they have this massive property bubble? Why would they have the horrible, horrible demographics that they have? Why would they have the youth unemployment rate that they have? So I don't think the middle and lower class life is good. I think that it is better than it was maybe 40 years ago, but it's not better than it was 10 years ago. And it's going in the wrong direction. So anyways, okay, let's get back to the newsletter. Thanks for joining though, Dan. And let's where am I at? Here we go. Okay, Bitcoin price. We have 184 people watching, probably most on Twitter, guys. I am live streaming on YouTube, Rumble, and Telegram. You guys can check out those links. In my earlier tweet, I also think I pinned the pinned tweet has all the links. Okay, Bitcoin price. So last issue, I said all-time high resistance is the next level to watch for. Price action fell short of the all-time high last week, but is already starting to make another push this week. Fundamentals are so positive for Bitcoin right now. When it breaks the all-time high, you can expect a significant move higher. So here we go. Got almost up into this resistance box. Didn't quite touch it, but we're making another run for it now. And let's go to a live chart. All right, live chart here. We got that resistance, 69,850 right now. I got as high today as 7601. I do think we're going to push forward today, being Memorial Day and a holiday. There wasn't a lot of action. So tomorrow, I think we are going to get some action in the Bitcoin price. And I would love to see a break of the all-time high this week. And where's the next level? Well, let's go back to the report, and I do talk about that. Where am I at? This one. Okay. There really isn't any price structure to go off of, like horizontal resistance or support once you get above the all-time high. So round numbers like 80K will be important resistance levels, and Fibonacci extensions will also be important resistance levels. Price has done two 90% moves this year. If we repeat that again, so this would be a repeating pattern fractal of 90% moves that we can use to go off of. If we repeat that again, it would take us to over 100K within a few weeks. Whatever happens, the moves should happen quickly and then consolidate. Remember, it's not going to give time for fence sitters to get in. Once they decide to get in and they get a little bit of FOMO, it's going to be the top of that next move, and then it's going to consolidate, maybe pull back 20% for 2 months before it goes up again. So that's the gains are going to come in short and quick spurts, I believe. We are nowhere near the end of this bull market. So here's the Fibonacci extensions. You can see up here at the 1618. That's at 84. So I could see a breaking the all-time high, hitting 80, round number. Maybe there'll be some resistance there or not. And then maybe going up to the 1618 level. All in all within this bull market. So the overall bull market is going to be going a lot higher than that. But that's just near term, what I'm thinking. The heat map this week is showing a significant amount of liquidations still above the price, or liquidations to be had still above the price. The liquidity of liquidations acts like a magnet for trading activity. So let me just make this bigger. So these are like clumps of where traders are going to be getting in trouble. If the line is above, if the color is above the price, those are shorts. And, you know, if the price moves against you in a short position and goes up, then you start getting squeezed. Okay. And these are areas where people will be forced to close their shorts, where they'll get liquidated. And you can see there's still a significant amount above the price up here. This acts as a magnet. You see it acted as a magnet all the way up. I was talking about this 2 weeks ago. This acted as a magnet. This level acted as a magnet. Then all the way through here, it was like a chain, a cascade of liquidations. And then we tried to take this level, which we did. And now they're building up above us again. So this is providing liquidity for the market, and it acts as a magnet. All right. That's it for price. Let's go on to Bitcoin mining. So just if I pick out a few headlines each week, and I thought these were pretty big ones. So Kenya partners with Marathon to monetize underused energy in mining. So Ethiopia and Kenya, that part, you know, Eastern Africa is getting a lot of attention from Bitcoin miners, and this is just the latest. So Kenya's geothermal energy capacity is substantial, with the country being one of the leading producers of geothermal power in Africa. Despite this, a significant portion of the generated energy remains untapped. By partnering with Marathon, Kenya seeks to turn this surplus into a valuable resource, generating additional revenue and promoting energy efficiency. The deal involves not only the use of untapped energy for mining, but also the joint development of technology projects that could benefit the country's infrastructure and technological landscape. Okay, so I would be more bullish on mining in Kenya than I would be on mining in Ethiopia. I know there's a lot of people doing stuff over there in Ethiopia, but they're in a civil war, and Ethiopia and South Sudan is not like the best place to put your operations, I would say. Kenya is more stable and south, and there's a lot of interest, a lot of recent investment into Kenya, like the Belt and Road stuff. Now, I don't think it's necessarily the best place to invest. You're probably not going to end up making your money back, but that has been popular, and we'll see how this turns out for the Kenyan government. Okay, Northern Data, Peak Mining acquires second 300 megawatt site in Texas. So Northern Data's Peak Mining, yeah, there we go. This is from Bitcoin.com, so I did archive this link because I'm not going to link to them, but there you go. Northern Data's Peak Mining revealed the acquisition of a new Texas location featuring 300 megawatts ERCOT approved interconnect. Peak announced on Friday that construction is in progress and the site is expected to be operational by early 2025. The announcement highlights the deployment of indoor, custom-designed, fully integrated, and liquid-cooled HPC data center systems to significantly enhance deployment speed and reduce infrastructure costs. This purchase follows a 300 megawatt site acquisition finalized last December, and it's right next door, actually. Oh, yeah, both sites situated next to each other. So this is interesting. I mean, it just continues to grow and grow and grow. Northern Data is a really big player. I think they're the fourth or fifth largest public miner by market cap. And yeah, they continue to expand in the United States. I believe they're headquartered in Germany, or maybe it was Belgium. I can't remember. One of you guys can correct me, but yeah, global demand for Bitcoin mining. And where do they go? They go into Texas. So there you go. Hash rate. Hash rate staged a remarkably fast comeback after the halving. Estimates for the next difficulty adjustment in 8 days are now 5%, around 5%. And you can see here was the halving, and then we dropped down. I mean, hash rate went up a little bit. Hash rate went up a little bit after the halving because of all the fees. Okay. But then it went down, and you can see the difficulty dropped right there. The pink line bottomed out, and now it's starting to race back north. So big, very fast recovery for the hash rate here. Mempool fees are embarrassingly cheap right now. Average priority fees is running around $1 to $2. No volatility signal in fees at this time. So what I mean by that is when fees start to go higher, like in this section here, when fees start to go higher, that to me is a signal of imminent volatility. There's a higher percent chance that there is going to be a significant sell-off in the near future. And that is what happened. So right now, this is not showing any rise of any sort of risk in the market right now for price, like a big sell-off or anything. Okay, that's it for the mining section. Let's go on to layer twos. So layer twos, including token protocols. If you guys know, I've been talking about these things because I'm using them as, well, one, I need to be complete. And this is really a big part of what's going on in Bitcoin right now. I'm not a big fan of it. I have never bought any of these things, but that it is what it is. Okay, so we need to be covering it. And there is also the big thing is for Bitcoin to scale, for Bitcoin to get this global adoption. I mean, it'll be globally adopted as a store of value, the way things get monetized. And then when there's like trillions of dollars and people want to spend it, then there's going to be things built on top of Bitcoin. That's where the innovation will come to scale it as a medium of exchange. But where was I going with that? I lost my train of thought. No, it's these things, these layer twos are where the innovation is happening right now. And I cover something down below as well at the end of this section that's showing that there is a ton of activity. And maybe, just maybe, they will stumble across something that is that beautifully scales Bitcoin. So that's why I don't really poo-poo on this stuff very much. I don't like it, but this is where the innovation is happening, and there could be a miracle that comes out of this. Okay, these layer 2 tokens on Bitcoin they're a proxy for speculative demand. I also am using that as a proxy for speculative demand. If the volume goes up on these things, most likely the price is going up or will go up. I expect that their volume will pick up as the price breaks to new all-time highs. Inscriptions, on the other hand, are much more expensive and resource intensive, so their volume might not pick back up. The rise in volume for runes might be the reason behind why the mempool is having a hard time clearing. Every time the fees are low and the network can start eating through the backlog, runes take advantage and up their volume. So if you look back here closely, on early May, runes really fell off. There was very low volume, the pink in this chart here. And now they've started exploding again, over 300,000 transactions. Or no, more than that. No, it was 333,000 yesterday. So that is pretty big for runes. Inscriptions, you can see, have not come back at all. They're more expensive. They use a lot more block space. And so it's already dying. But that's good. I mean, experiment, and then the experiment goes away because it died. That's fine. That's fine. Runes is the current hotness. Okay, but this is what I was talking about. The BEVM unveils groundbreaking Taproot consensus for decentralized Bitcoin Layer 2 solutions. Taproot consensus is a Layer 2 protocol of connected signatures to enable Ethereum-like functionality. I'm not endorsing it. I don't even really understand it, but it is. I'm offering it as an example of the explosive innovation that's happening in Bitcoin Layer 2s. And you never know. There could be, seriously, this development right here, Taproot consensus, could connect a dot in another developer's head, and now they come up with something great. So even if this doesn't work, and it's probably not going to take off, but even if it is technically unsound, it might help other people figure things out. So, it's a compounding process of innovation. Anyway, this is what this article says that I linked to. On May 20th, the Layer 2 development team BEVM released the technical yellow paper titled Taproot Consensus, a decentralized Bitcoin Layer 2 solution. This paper details the implementation of Taproot Consensus, leveraging native Bitcoin technologies such as Schnorr, MAST, and SPV to build a fully decentralized Bitcoin Layer 2 solution. Taproot Consensus represents a significant leap in native Bitcoin scalability, combining existing Bitcoin technologies innovatively without modifying Bitcoin's core code. That's very important. And here is this image. They have the Schnorr, MAST, SPV. They call it the Byzantine fault-tolerant POS. But I think what they're doing is every single node will have a part in this proof of stake type of sign off. I don't think there's going to be tokens. It's going to be using Bitcoin. That's what's very important to these Layer 2s, because it keeps the incentives unvarnished or untouched. And so, yeah, this is a great development as far as I can tell at first reading. So, all right, guys, that is it for this one. Let me go back up to the top, and I'm going to check out any comments. John Delaney back. What's up, man? Okay. 234 people watching. Probably most of you on Twitter. I am live streaming on YouTube, Rumble, and Telegram. Those links will be in my pinned tweet, so you guys can check that out. And like, comment, subscribe. What else? No comments to answer, so might be a short one here. Let me go back to this. All right. Well, I'm not seeing anything. So that's going to be it for today, guys. Thanks for joining me. And I'll catch you on the next one. Bye.